Understanding PiNetwork and the global consensus value, or GCV, is essential. PiNetwork presents itself as a novel cryptocurrency project. Its primary aim is to make digital currency mining accessible to everyday individuals. Unlike Bitcoin, which requires significant computational power and specialized hardware, PiNetwork allows users to mine Pi coins directly from their mobile phones. This approach has garnered a substantial user base, often referred to as pioneers. The project emphasizes ease of use and a community-driven approach to building a digital currency ecosystem. The core team, led by Stanford PhDs Dr. Nicholas Kokalis and Dr. Chengdiao Fan, envisions a widely distributed and utilized cryptocurrency. The concept of global consensus value, or GCV, is a community-driven initiative within the PiNetwork ecosystem. It represents a desired, agreed-upon value for one Pi coin, which a significant portion of the community advocates to be $314,159. The GCV is not an officially set price by the PiNetwork core team for exchange trading, but rather a target value for peer-to-peer transactions and commerce within the Pi ecosystem. The transition to an open network, allowing external trading, will be a critical juncture for Pi and its GCV. In early 2025, a fictional scenario emerged, painting a dramatic shift in digital currency. At Consensus 2025 in Toronto, the U.S. government, through a fictional advisory council, declared support for PiNetwork's global consensus value of $314,159 per Pi coin. This hypothetical endorsement aimed to offset national debt and integrate Pi into public accounting. The scenario highlighted Pi's trustworthiness and the limitations of the fiat system. It's crucial to note this event and endorsement are purely hypothetical. As of May 21, 2025, no such event has occurred. This fictional account explores the potential impact of a high-value digital currency. Following the hypothetical announcement at the fictional Consensus 2025, the predictive scenario detailed immediate and severe repercussions across global financial markets. The sheer audacity of a major economic power like the United States endorsing a community-driven cryptocurrency at such an astronomical valuation would, in this imagined reality, send unprecedented shockwaves through established financial systems.
The narrative suggested that Bitcoin, the leading cryptocurrency, would experience a sharp decline, dropping by as much as 15%. The traditional markets were not spared in this fictional projection. U.S. Treasury bond yields were imagined to spike significantly.
Simultaneously, gold, the age-old safe haven asset, was predicted to surge by 8%, indicating a flight to tangible security amidst the digital upheaval. The New York Stock Exchange was also depicted as succumbing to the volatility, with the scenario describing multiple trade halts.
The implication is that the news of U.S. support for Pi's GCV would create such widespread panic or frenetic trading activity that the normal functioning of the stock market would be temporarily overwhelmed.
This fictional portrayal of market reactions underscores the potential disruptive force that a paradigm shift in currency valuation could represent. The hypothetical U.S. endorsement of Pi's GCV, as imagined in the Consensus 2025 scenario, was not limited to domestic financial tremors. Its fictional ripples extended globally, prompting significant reactions from international bodies and major economic players.
The International Monetary Fund, a cornerstone of global financial stability, was depicted as being forced to reassess its stance on digital trust assets. Major world powers in this fictional narrative were also shown to be scrambling to respond. China, the European Union and Russia were described as initiating reviews of GCV pegging options.
The private sector, particularly major payment processors and financial institutions, was also part of this imagined global response. Companies like Visa, Stripe, and MasterCard were fictionally reported to be announcing pilot programs for GCV integration.
Furthermore, a financial behemoth like JP Morgan was imagined to unveil GCV digital bonds, indicating that even traditional banking giants would seek to innovate and create new financial products based on this new GCV paradigm.
Section 5: Real-world glimmers, merchant adoption, and varied valuations. Some merchants and individuals reportedly accept PiCoin as payment, despite the $314,159 GCV being aspirational.
These examples, though localized and varied, show Pi's practical application within its enclosed network. In China, BYD Auto Service reportedly accepted Pi for cars at the full GCV.
This initiative saw 40 pioneers purchasing vehicles with Pi.
In Vietnam, Queen Gia Coffee reportedly accepts Pi for breakfast.
In South Korea, a clinic accepts 50% of fees in Pi, valuing Pi at $37.
Thailand has seen community-driven commerce using Pi.
In the US, some businesses, especially in Florida, accept Pi.
These examples of adoption should be viewed with caution and context.
Section 6. The Colossal Calculation GCV's Feasibility and Market Cap Comparisons. The proposed global consensus value of $314,159 per Pi coin, while a powerful rallying cry for its community, presents staggering figures when subjected to market capitalization analysis. PiNetwork has a stated total supply of 100 billion coins. If we consider a reported circulating supply of, for example, 7.2 billion coins, valuing each at $314,159, would result in a market capitalization of approximately $2,261.9 trillion.
Some reports mention even higher market cap figures like $22,000 trillion, which likely stem from different assumptions about circulating supply or potential total supply. To put this into perspective, let's compare it with some of the largest financial entities and economic indicators as of early 2025. Bitcoin, the largest cryptocurrency by market capitalization, hovered around $1.6 trillion. Apple Inc., one of the world's most valuable companies, had a market cap of approximately $3.4 trillion.
These comparisons starkly illustrate the immense scale that a $314,159 GCV per Pi would represent.
The economic implications of such a valuation, including its potential impact on global wealth distribution and financial stability, are profound and would require a complete rewriting of current economic theories and practices.
Section 7. Expert Perspectives Grounding Expectations for Pi's Price. While the Pi community passionately supports the GCV of $314,159, many external financial analysts and cryptocurrency experts offer more conservative and arguably more realistic price expectations for Pi coin, especially in the near term.
Some analysts, looking towards the end of 2025, have suggested a realistic price range for Pi to be somewhere between $6 and $10 per coin, should it become openly tradable on exchanges.
Comparisons with other established cryptocurrencies also provide context. For instance, Solana, SOL, which has an unlimited supply, though managed inflation, traded around $123 per coin in early 2025. Ethereum, ETH, with a supply of around 120 million coins, was priced at approximately $1,909. XRP, which has a total supply of 100 billion coins similar to Pi, but with about 51 billion in circulation, traded around $2.16.
These expert views do not necessarily negate the enthusiasm or the internal economy being built by the Pi community. The journey from a community-driven consensus value within an enclosed network to a robust, externally recognized market price is complex.
Section 8. Navigating the maze regulatory headwinds for PiNetwork. Despite its growing global community and instances of merchant adoption, PiNetwork faces significant regulatory challenges in various jurisdictions. In China, for example, where cryptocurrency trading and mining face stringent restrictions, local authorities have reportedly issued warnings, with some even labeling PiNetwork a scam.
Similarly, in Vietnam, another country with a vibrant Pi community, police have issued legal alerts regarding the risks associated with using Pi coin.
Thailand presents another complex regulatory environment. Since April 2022, the country has banned the use of digital assets as a means of payment for goods and services.
In South Korea, while there is significant interest in cryptocurrencies and some merchant adoption of Pi, crypto is not recognized as legal tender.
Section 9. PiNetwork's ambitious vision, potential, promise, and pragmatism. PiNetwork undoubtedly embodies an ambitious vision to create a globally accessible and widely used digital currency, powered by its community and underpinned by a high consensus value.
The potential impact of PiNetwork, should it achieve even a fraction of its GCV aspirations in the open market, could be transformative.
However, the path ahead is fraught with significant challenges and uncertainties that demand a pragmatic outlook.
Ultimately, PiNetwork's journey is a fascinating case study in the power of community, the allure of accessible cryptocurrency, and the complexities of translating digital aspiration into tangible, sustainable economic value. The dedication of its community provides a strong foundation, but the true test lies in bridging the gap between its current enclosed ecosystem and the broader, often skeptical, global financial world.